Do you know what market has outperformed in 2023? Well, it's the British pound against the US dollar. Let's find out why and see if this run can continue. The pound has been one of the standout performers in the market in 2023. It's risen in value against the US dollar, and the pair has hit its highest levels since April last year. The pound has hit its highest levels against the Japanese yen since 2015 and is also making some good gains against the euro. The pound is benefiting from expectations of aggressive interest rate hikes from the Bank of England, who is hiking rates to help combat inflation in the UK, which remains stubbornly high. And I know what you're thinking. Why does rising interest rates make the pound more attractive? Well, this is actually quite simple. You're more likely to earn a high yield on your pounds because the banks are offering a higher rate of interest. Therefore, higher interest rates convince more people to turn their currencies into pounds to earn a greater return. So on one side, we have the pound gaining strength because of the expectations of high interest rates. And on the other side, we have the US dollar falling in value. It's falling because many economists believe the US Federal Reserve, otherwise known as the Fed, will refrain from interest rate hikes. Therefore, expectations are lower for the USD. This is why the GBPUSD forex pair has been rising in value so strongly since last March, and why investors are anxiously waiting to see what the prospects for the pound will be. There are three reasons why the GBPUSD could continue to rise to new heights. One, US inflation is cooling faster than expected, falling to 3% in June, with the Fed now expected to revise its hawkish policy and slow down or pause interest rate hikes. Two, the dollar index, which tracks the USD against a bracket of other currencies, just hit its lowest level since April 2022. That signals broad USD weakness. And lastly, three, UK interest rates are now expected to hit around 6.5% by Q1 next year, thanks to strong inflationary pressure and wage growth. Make sure you follow XTB to learn more about trading and investing.